For decades now, the cultural narrative has framed the single-family home as the definitive milestone of financial stability. The math seems straightforward. Save for a down payment, replace your monthly rent with a mortgage, and build equity through a predictable, long-term asset. But the data suggests a disconnect between that expectation and the lived experience. Bankrate's 2025 research found that 42% of homeowners express regret, specifically citing the weight of unforeseen financial obligations. To understand that remorse, look at the 2025 Hidden Costs of Homeownership study. It identified that beyond the scheduled mortgage, the average U.S. homeowner faces an additional $21,400 in annual expenses. Homeownership functions as an active financial subscription. The true recurring costs of this commitment often remain obscured until the closing documents are finalized. The first category of expenses on this ledger begins with the mechanics of the loan itself. Upfront friction costs, including origination, appraisals, and title insurance, can be significant. On a typical $200,000 home, these closing fees average roughly $3,700. This diagram illustrates the path of a modern mortgage. Once a bank issues the loan, they often sell it into the secondary market, where it is bundled into mortgage-backed securities and distributed as fractional pieces to institutional investors. The structure of these securities, paired with high interest rates, dictates the total cost of capital. Over the life of the loan, interest costs can rise to exceed the actual purchase price of the home. In the early stages of a standard 30-year term, monthly payments are dominated by interest. This means the buyer is primarily paying for access to debt rather than increasing their ownership of the physical structure. The second major expense category involves property taxes, which buyers frequently underestimate by relying on a seller's historical records. Most jurisdictions trigger a reassessment upon sale. This formula shows how the county recalculates your bill based on your actual purchase price, often resulting in a much higher taxable value than the previous owner held. That higher tax figure triggers a mandatory escrow adjustment. For many buyers, this leads to a mid-year payment increase of $400 to $600 a month. Geography plays a decisive role in these figures. New Jersey homeowners pay an average of $9,200 annually, while states like Florida provide a homestead shield that can limit how fast those taxable values are allowed to rise. Failing to project these local tax adjustments can neutralize a buyer's expected equity gains and put immediate pressure on the household budget. The third and largest recurring cost is maintenance. While many budget for minor fixes, the average annual upkeep for a single-family home is currently $8,808. This cost is largely driven by age. The median American home is over 40 years old, meaning critical systems are increasingly prone to failure. Institutional lenders often use the 2% rule as a baseline. As this graphic shows, owners should expect to spend roughly 2% of the home's total value every year just to preserve its current condition. Inflation has made that rule even more expensive to follow. Since 2020, the cost of building materials and labor has surged 25%, making routine repairs more capital-intensive than in previous decades. Under these conditions, the structure becomes a demanding asset. Maintenance is no longer about simple fixes. It is a cycle of necessary upgrades to prevent the value of the home from degrading. When you combine borrowing friction, property tax reassessments, and inflation-adjusted maintenance, the total annual ledger reaches that $21,400 average. Over a decade, neglecting these details, such as missing tax exemptions or underestimating repair costs, can erode tens of thousands of dollars in potential equity. Identifying these figures isn't a reason to avoid buying a home. It's a prompt to approach the purchase with the precision of a financial analyst. Preparation provides a defense against the financial shocks that frequently lead to buyer's remorse. By accounting for the hidden ledger, you can align your lifestyle with your actual budget. For more simple and honest insights into how money actually works, subscribe to the channel.